Hey there, Ed McCormack here, founder of the crypto education platform dChained. Before we start today's video, if you haven't already, please subscribe to this channel and pound that like button. We're so appreciative of all the new subscribers and viewers that we're getting every single week in every single video, and we love all the support that you guys have given in helping us spread the word. So with that out of the way, let's talk about the elephant in the room, not only in crypto, but the overall global economy, which is the potential default that might happen right now on the biggest property developer in China, and ultimately how that might destabilize the biggest stable coin in the crypto market, Tether. And we're going to talk about all of that right now. So before we jump into Tether, let's start by talking a little bit about the Chinese economy. And then we'll shift gears into Evergrande and then begin to talk about what the implications could be for crypto and Tether in particular. So when looking at the Chinese economy, it has undergone a massive 180-degree change in terms of how its economy operates and ultimately what the driving forces are for its national economy. In the last 30 years, one of the biggest sources of its domestic product has been the housing market. In particular, all of these new construction projects that have enabled many Chinese citizens to buy or rent new apartments or building out entirely new cities where they never existed before. And while this has been a major boon for the Chinese economy, what it has created is basically a house made of cards where many of these construction companies are basically leveraging a tremendous amount of debt in order to continue financing more and more projects. And this is where things start to take a turn because in recent months, President Xi of China ultimately started taking steps to mitigate all of this debt leverage that many businesses across China have been using as a means of mitigating potential financial stress and potential collapse in the years to come. And this ultimately created two major scenarios. On the one hand, you have seen a demand for housing plummet. And with that, it had a domino effect on some of the biggest property developers in all of China because without new projects being created and ultimately sold, they are then liable for all of that debt that they've accrued and leveraged. And ultimately, they are now liable to all those creditors that gave them the money to build the previous projects. It's a bit of a Ponzi scheme-esque kind scenario here. And this is the situation that we've arrived at today with Evergrande. Now, Evergrande is the largest property developer across China. They have not only 180 projects that are going on at any one time across almost 300 cities, but they have $300 billion of assets under their management. And this is where things get interesting because in order to finance all of these projects, what they've had to do is take on debt not only from domestic bondholders, but also look for financing offshore. And the result is roughly several $100 billion in debt that they now owe both to domestic and foreign investors. And this is the scenario that we've come to now where in the last few months, it has become apparent Evergrande is not going to be able to pay all of this debt. If you look at its stock, which trades on the Hong Kong Stock Exchange, it has plummeted over 80% over the last few months. And with that, this week, this is the September 21st and 22nd, they ultimately are now sort of coming up to their deadline when they need to meet coupon payments on the bonds that they've issued, both for onshore investors and offshore investors. Otherwise, what they face is default, at which point all of those creditors can then come knocking on their $300 billion worth of assets in order to make whole their investments. This is where things get interesting because ultimately, in the last 24 hours, the Chinese government has shown signs that they're going to step in to help alleviate. But they're only really going to be focusing in on onshore investors, meaning the odds are is that the actions that they're going to take are helping to restructure a lot of this debt in order to make whole any of the domestic bondholders, or as whole as they possibly can get to. What that creates, though, is not only a wonderful solution to a potential crisis across China domestically for them, but it also creates internationally a huge issue on both sides of the globe. For foreign investors, and we're talking about big banks here, we're looking at BlackRock, we're looking at UBS. These are big institutions, HSBC. These are institutions who are now potentially going to be left in a hole. And the repercussions could be massive, especially as it relates to all the credit ratings that these foreign banks put on China and Chinese businesses moving forward. On the flip side, within China, because this is ultimately creating a scenario where they're avoiding a huge systemic issue and a financial collapse, what this creates is a very difficult challenge for them, because one of the countries that is neighboring their borders, that's breathing down their necks to take foreign investment away from them, is India. And this could be a huge opportunity for India to step in and start courting many of those investors who are looking for Asian investments. Now, coming full circle, why do you care as a crypto investor? Well, the reason you should care is that when you look at the largest stablecoin that basically operates across every single exchange, with the exception really of Coinbase and some other US-based exchanges, it's Tether. Now, Tether, while its original launch was focused in on creating a one-to-one peg, and it was overseen by Tether Limited, which is based out of Asia, that's not the case anymore. Tether has openly admitted that they have moved on from doing a one-to-one collateralization with the US dollar for every Tether. And in fact, a lot of its collateral today comes from commercial paper that many companies use to raise debt in order to get money. And with that, because over 60% of this commercial paper is based out of China, what this creates is a direct and indirect issue here. On one side, because Tether has not been very transparent in its auditing and really understanding what is in their reserves and what their holdings are that's used for collateralization, you have a lot of investors who are questioning, do they own Evergrande paper? Are they a bondholder? The other aspect here is that with ultimately the growing collapse of commercial housing within China, it is going to have a humongous ripple effect across all these businesses across China. All these businesses who supply windows or doors or even the wiring in these buildings. These are all businesses that, in effect, they're raising debt as well. And it's going to have a huge impact. When construction starts to pull back, in effect, because this is a very large part of China's economy, this is going to be widespread and it's going to be felt from every corner of the globe. And one of the stable coins that we all rely on in crypto, Tether, could ultimately face a scenario where its basis asset, which helps maintain its stability, could be under threat. And it could create a scenario where Tether might have to pivot, and ultimately could create a scenario where another stable coin, whether that's Luna or USD coin, or perhaps one of the other emerging coins out there, maybe RSV, could step in and potentially take its place as the leading stable coin, or start to steal some market share. And we have videos that we've produced about some of these stable coins, especially Luna, that could really be interesting to watch because when UST, which is Luna's US dollar equivalent, when that gets bought, Luna gets burned. And you see this deflationary mechanism. So this ultimately could create a scenario where, for one, as an investor, you may want to start evaluating all the different trading pairs that you're doing if you're trading off of Tether. The other is you might want to look at maybe some other blockchains or some other stable coins, which could be a big investment in the event that this crisis becomes much bigger than we anticipate. So I hope you found this video helpful. And if you did, again, subscribe to this channel, pound that like button, and tell your friends and family. We put a lot of work, a lot of time, blood, sweat, and tears into putting together objective information and really trying to make it entertaining. And we love all the support that we get from the viewers. So until next time, happy and safe investing. I'll speak with you soon.